Okay, before we get started, just remember that any advice in today's session is of a general nature only, and that your personal circumstances have not been taken into consideration. Okay, so let's have a look at what we have on the agenda this week. Let's have a little bit of a review of what's happened last week and how we can plan forward, and if any trades that might trigger from a technical or a fundamental point of view. Now, in terms of critical type 1 data, we are quite light this week. Okay, so what I mean by type 1 is that the highly impacting data, there's not really a lot there. That does not mean that it's not going to be a week where the markets may not move. There is, in fact, quite secondary data, but when it comes out in batches, like a whole batch at the same time, it can be quite important. It's a Euro data this evening at 7 p.m. I think it is, and it's PMI. By the way, 7 p.m. that is Sydney time. It's PMI flash numbers for France and Germany, which is quite impacting on the euro. Now let's have a bit of a look at the euro and what took place last week. Now, most analysts believe that the euro is going to be the hot one to trade this week. All right. Um, the PMI figures that I'm referring to that are coming out later this afternoon and tomorrow, which is this one here, which is listed the German Info Climate number. Most analysts believe that this number is not going to be too pretty. All right, so which kind of sets the euro up into a little bit of a critical area. And when I look at a chart, you'll understand what I mean. But basically, Mr. Draghi reminded everybody last week that easing could be necessary. All right. This was further reinforced by the ECB minutes later in the week, and we saw that the euro lost ground to quite a few currencies, against most pairs, last week. So the combination of expecting data, which is due out later today and tomorrow, and the combination of the euro trading right now around about that 111 area, which is an area which was previous to a major breakout, and it's also an area to the 200 simple moving average, which I'll show you when I move over to the charts in one moment. It makes it critical. Should we break that region, that 110.50 kind of area, or if we break the 110, we could easily slip down into the 108 region. So that's going to be critical. Breakout traders, you need to be alert, you need to be ready for it, and let's see if we can basically take advantage from that. All right, so that's the euro on the fundamental side. The other dominating news, and quite surprisingly, the impact that it's had on the market is the British pound and all the talk of Brexit, as they've named it, which for those of you who don't know, we're talking about the Britain's withdrawal from the EU. All right, now the earliest that a referendum could happen is about 3 months away. So it's very, very surprising that I guess investors and retail traders are reacting to it so much so with quite a lengthy leading time, so to speak. And the reality is that that is the earliest it could happen, and it could even be delayed to 2017. Having said that, most analysts really, really do believe that the British pound is trading way lower than where it should be, and we're looking for any kind of opportunity for a bit of a rebound. So when we look at our charts, let's keep that in the back of our head, because it can assist us in our technical trading decisions when we know that the fundamentals are supporting something else. All right. So what the technicals and the fundamentals are showing right now is that from a fundamental point of view, there's a lot of divergence. It just doesn't make sense for the British pound to be at the levels that it is based on pure speculation. Now, when the movements are so large and so rapid based on speculation, what this essentially really, really means is that it's a market that's easily moved, easily spooked, and any movement in the other direction, and it could give back all the gains or losses that it's gone in whichever direction you were in. All right, so keep that in mind. JPY. The yen, now we know that the yen has been the hot one. It's been moving around quite a lot. Now, basically, Japanese Prime Minister Mr. Abe's stipulated that they need to take steps to boost wages and stimulate spending. At the same time, Mr. Kuruda from the BOJ said that negative rates will assist the economy. So these are all things that are pointing to some kind of Japanese intervention. At the moment, they have not pulled the trigger, and perhaps at the levels that we're at right now, so it may not be required. But certainly, if we start to enter that 111 region, it starts to get a little bit scary. So, and we are getting there again. So, when we have a look at the charts, let's keep that in the back of our minds as well. Finally, let's have a look at the Aussie dollar. Aussie dollar last week, one of the comments from an RBA board member, and the comment was quite a simple comment, but it was basically that he said the Aussie dollar is trading too high, and much more comfortable levels is the 65 region. As soon as that happened, what happened to the Australian dollar? We tumbled down. We lost about a solid 150 odd pips in that movement. Now, what does this actually mean? It does mean everybody knows in Australia for a healthy economy in Australia, we require a dollar to be around about that 65 to 68 region. It's not a secret. Everybody knows it. So when we're trading, a solid 600 pips above that, we kind of start to worry when there's a lot of pressure, USD sort of coming on a little bit. So that 70 level, you get the feeling it's going to get a test again. All right, so just let's keep that in the back of our mind. And finally, I think I skipped it, but the final one to look at was the USD. Basically, FOMC minutes last week and also consumer price numbers indicated pretty much against a federal rate rise. So market's a little bit confused. It's not really taking off the way that it's expected. So the US is not sort of that runaway train with all that energy and all that strength. It's kind of like it just started it rolling down the hill, but it's not really rolling right now. It's come to a bit of a grind and a halt and a wait for further data and information. In terms of the data that's coming out this week, it's what you can see on my screen. I guess the highlights is towards the end of the week, unemployment claims from the US and crude oil inventories. So I think because of the nature of the euro trading at a critical level, a little bit of euro data, PMI numbers, and so much US figures coming out. The one this week that's going to trade the most under the influence of data is going to be the Euro USD. Okay, so put that on your calendar, put that on your alert. Uh, let's kick off and bring our charts and let's see what we have in store for us. Any questions, as always, just please type them in and I'll answer them as I go. All right, so here we go. Aussie dollar daily chart. We got this top resistance line which seems to be holding, and I've jiggled it a little bit. I think last week I may have had it there or something. Either way, they're both valid. I have been extremely busy at the moment, and I apologize because I have missed a few trades. I will be sending out an email to everybody, just giving you a little bit of awareness of what's happened and some of the reasons why I have been where I have been. But nevertheless, I still dedicate a solid chunk of my time to look at the markets on every Monday. Question to the group. Did anybody take this trade right there? Can I just get a show of hands? I'm hoping that at least 30% of you did, or 40% of you took this trade. Who took that trade? I'm compiling the numbers, so just keep typing away. If you who saw it but didn't take it? Okay. All right. So can everybody see that that is a trade right now? What type of trade is that? Is it a valid trade? It's a short trade. No, it's not an engulfing. It's an inside. It's an inside candle. All right. So this particular one here is essentially where what we're trading is we're trading a bounce off that resistance line, and you get this candle over here. This little one here is inside that one. Now, if you took that trade, you should have already hit your target, your one-to-one target, because the trade went forward about 62 pips and the stop was about 55-ish. So you would have hit your one-to-one. All right. So in theory, like the trade is still valid, hasn't been stopped out. But again, remember, because I've hit the one-to-one already, I wouldn't take this trade now if I was trying to take it late. All right, so I just wanted to point that one out. This line, remember, there's all that pressure fundamentally for the Aussie dollar to go down. So it's going to be really interesting to see if we actually have enough momentum to make a clean break and change the mood of the market. All right. Now, if that happens, don't be afraid to take that trade. All right. Even though I've just told you that fundamentally it's good for the country for us to be at 65, 66 in that level, that doesn't mean that we're going to go there. All right. Now, we still functioned as a country for a long, long time when we were at 110, 108, etc., etc. So one thing is what's good for the economy, but another thing is what the reality is. So if you happen to get a candle that breaks so cleanly like that, don't be afraid to take that as a trade. All right. Unless in your rules, you are not a breakout trader, and then that's all right. Just sit it out. But the trade that will feel much, much nicer for us is if we get another opportunity to hit it down. So what I'm trying to say, let's see if I can draw my lines a little bit further out. What could happen is if I drew it about there and I get this today's candle, let's say even kind of like that, and then tomorrow I get it like this with a fractal there, then I could hit it one more time. Okay, so if I get it that way, I could still try and trade off that top line. Anything further up is not really going to give me the opportunity. What I'm afraid of is that this could now just go down like that and I've already missed it. So, but let's just wait and see. It's the only thing that I can see on the Aussie dollar. Um, if I'm looking for a forward trade, well, I don't have one yet until I get through this resistance line. Does everybody understand what we're talking about? Are we all on the same page? Until the resistance line gets broken, it's very difficult for us to be buyers. All right, and this resistance line looks really good. Like, we've got three solid touches. Arguably, we've had four there. So let's wait and see. Let's see if we get another opportunity to shoot down with it, or alternatively, let's see if we just break it for once and for all, and then we'll step through in a forward direction. So the Aussie dollar for this week, it's the only thing that I have available for you. In fact, I've looked at so many charts today, and a lot of the charts are not really displaying clear entries. So we're trying to I don't like to force a trade. I like to stick to my principles. So sometimes when I can't find what I'm looking for, what I might do is I might deviate to a different currency pair where perhaps I do get the setup that I'm looking for. So, but again, if you're going to do that, make sure that it is something that you address within your trading plans. All right, Euro USD. Now the Euro USD, as I said, now last week the euro lost a lot of ground. And there you have, that's what we're talking about. And right now we are trading at that level there, that 111 area, which is a level where we broke out of this range. Okay, we had traded in here for a good solid, that's about 2 months worth. all right, between December and about nearly the end of January. We traded inside that region until we finally broke out. So what I'm trying to say is when we get such a breakout, and either this is going to shoot and take off again, okay, um, but we have all that data that most analysts believe that is not going to be healthy data. So if they're correct, we could break through that. Now, by the way, I've drawn this line. I never have this line on my chart. This is a 200 simple moving average. A lot of analysts like to look at it as a long-term support. Okay, and we're approaching the 200 as well. We're approaching that 110, that 110.50 region as well. So should we break through the 110? Okay, so should we get through that 110-ish level, which is there somewhere, 108 definitely becomes a possibility. Okay, so keep that in the back of your mind. Now, having said all of that, it looks like we could have the possibility of a setup in which direction? Which direction? Okay, Karen's right. Paul, Richard, Ray, Sanika. Excellent. Yes, in the forward direction up. Now, we don't quite have, let me get rid of that 200 SMA now. Give me 1 second. Okay, there it's gone. So right now, if this candle stays inside of that one, we will get a fractal there tomorrow. And then if we break that top in that direction, we could have the opportunity to trade the pullback, and it will happen right in that sweet area that I like. All right. So if that happens, that's okay. I'm happy to take that trade as well. All right. So I think we need to be looking for this one. I just get the feeling that the news that comes out today will make this candle either pop up higher than that level or pop down lower than that level. And in essence, what then that would mean is that we can't get the setup that I'm looking for. All right. It may, however, set up here like one later, and then we can take it there. So just don't forget to look out for that as well. All right. So with the euro, we are at a critical level. We're also at a level fundamentally where we're expecting data which most analysts believe is not going to be good, which could shoot the euro down. Now that on its own is not enough for me to just enter a trade right now, but I'm just purely giving you what the market is thinking. All right. So euro USD for right now on standby. We could have an entry tomorrow, depending on what this last candle formation looks like. All right, let's carry on. GBP USD. First thing I'll say about the GBP USD, let me give you a clue. There's my clue. What can we notice about the GBP USD? Great, excellent. There is a gap. This is the gap today. How big is that gap? Let me measure it. It's about 70 pips when it opened this morning, but there's still, and it has not closed. Okay. Now, what was this gap caused by, guys? Who was listening? What caused this gap down? Brexit. Yes. The I guess the speculation of Britain exiting the European Union. That's what created the hype, and this is what I'm talking about, that it's kind of like not really warranted. Like the speculation is the earliest that they could possibly have the referendum is 3 months away. So we're way, way, way out for people to start, shorting pounds. Okay, so most analysts believe that the pound is trading below its true worth. So in essence, we need to be looking for opportunities to possibly become buyers. All right, now let's see if I can find such opportunities because we've been trying to sell into it, remember? And this is a really good example also of being patient in a trade. I believe we traded this setup 2 weeks ago, okay? 2 weeks ago, and I took the trade. So for all of you who were following me, we took the trade together, and I believe the trade went forward, and then something happened. But I think I didn't make a loss, and I didn't make a win either, because I moved my stop, and then I got stopped out for zero. I can't remember exactly, but that's ringing a bell. What I'm trying to say is this: that trade which we entered at around about this level, he finally took the distance to hit that 1-to-1 point. And if this continues to goes down, it could move on to the next level. So some of you got that first target. Karen, well done. Anybody else that got that as well? It's a true lesson in patience, okay? And this is one of the most difficult parts about trading. So just keep that in mind. So for us right now, we were looking for sells. We tried to get a second entry over here, but it never showed up, and then it just took off on us. And now, well, right now I can't see an entry again. So fundamentally, I'm looking for an opportunity to buy. So let me just investigate that a little bit. I've just stepped into a 4-hour chart. Let's see if I can see anything that may help us. Okay, I was just trying to get some lines in here. Not really happening. Everything's pointing down. Okay, even though I want to be a buyer, all right, everything is pointing down, and I don't have a setup for a buy, and I don't have a setup for a sell either. So what does that mean? What do we do? Is that a pennant flag? Someone's asking. Okay, the answer is we do nothing. We wait and we do nothing. Correct. Okay, what time frame am I looking for that pennant? No, I can't see a pennant. Let me see if I can find one just to highlight what it would look like. I can't find one right now, but they can't. This is the closest that I found. Give me 1 second, and I'll show you. Right here, where you have like a long flagpole, and this comes down kind of like that. Okay. It can either be like parallel or it can be like that. So that's what the pennant will look like. Okay. Um, or it can be in the other upside down. Doesn't really matter the direction, but generally you would want it to be away from all of this. So it can't really be in between. It has to be like down here, okay? Or if it was up here, it would have to be up there. That's how you would look at those, all right? So I'll cover those again when I do pattern trading. All right, so GBP USD, There is nothing that I have available right now, so let's just sit and wait. But just keep in the back of your head that if I do get a buying opportunity, I'm going to be keen to explore it. So what a critical level could be down here. All right, so I'm just going to mark it and just keep an eye on it. Gold. Okay. Oh, look at that. Who did anybody trade this? Show of hands. I know gold, you need to trade it a little bit bigger, but did anybody trade it? No, no one? Okay, this is what you're looking at right there is about as classic as the picture looks like. Okay, so if I was to write a textbook on price action trading inside the trend, it would look like this. The only thing that would make it look a little bit better is if these two happened in there. That's the only thing that would make it look better. But basically the market pulls away, comes back, you get your big candle, your inside candle, and then you break and it goes in that direction. And this one, if I measure, your stop was say 250 and we've hit this trade would have hit your 1 to 1 point, which basically means right now you're either very, very close to getting stopped out on your second half of the trade, or you got basically a free trade to see how far it goes. All right, so that one's played out. It also occurred, look at that. It happened on that hot there or thereabouts, that hot spot that we marked out. So look, it got right to that and then shot away. So this was really a technically really good trade. And again, I apologize, I did not take that. I'm going to try and be a little bit more diligent. Um, but there you have it. So what do we have now? Now I can see if I step into a 4 hour time zone, you're going to see it. And I can see that I'm starting to narrow in. All right. So into like a a converging triangle. You can even see it on a daily chart as well. You can see it there. So let's just monitor and watch. Okay, so for many of you, if you're not trading gold, that's okay. I like to look at it anyway because gold sort of has many correlations with, say, the US dollar, particularly when in moments of risk on and risk off. When there's risk on, meaning currencies are volatile, a lot of money moves towards the metals, so gold takes strength. When risk is off, then the money moves away from the metals and it goes into different currencies, for example, because they can provide interest and they can provide a better yield. All right. So right now on gold, let's just leave it. Let's just see what happens and let me move on. US yen. US yen did not get the setup that it, unfortunately we didn't get that setup there. I was looking for this one, but it didn't happen. We are now pulling down very, very close to that sort of 111 region, which I spoke about from a fundamental point of view, is a level where that Japanese intervention may come. All right. So if you wanted to take a speculatory trade, okay, around about that 111 as we're approaching this bottom here, we could attempt to take a price action trade back up in that direction. If you happen to get the intervention to come our way, it could easily skyrocket in a hurry. So I'll be looking out for that trade. It's worth the risk. Either case, if I get it wrong, what's going to happen is it's going to go bang straight down and I'll get stopped out, so it's not a problem. But that's a trade that you'll kind of look for. So I'm going to be let me mark it on my chart. I'm interested in this area. I am interested in price action back up purely for the fundamentals, and I guess it's a little bit of a double bottom, but it's more for the fundamentals and the intervention than anything else. Does everybody understand the reasoning behind that? Great. Okay. So keep an eye on that one, and we're getting there. We're getting, as soon as we start to enter the 111 region, it starts to become a little bit nervy, and you never know if the BOJ may pull the trigger. All right. Euro yen. Okay, Euro yen. Some of you may have taken that trade. I'm not sure. I don't know if I saw it late or if I saw it right on, but I didn't take it. All right, so that was kind of just lucky that I didn't take it. It would have got stopped out. There is the possibility of another one right there. Um, to be honest, I just get the feeling that either that low or that high is going to be broken, which means there's not going to be a valid trade. However, let's not assume and let's just wait and see. So tomorrow morning, have a look at this candle and see if this candle is sitting in there as such, then you can place your pending break order back up into that direction. The channel's been around for a little while, actually more than a little while, you can see there, and we've had quite a few touches and we've projected off it. So let's see what happens. On a plus side, if you do get the setup and we get the intervention, basically the euro should go up against the Japanese yen, which will favor the trade that we're looking for. All right, so there you have it. Remember we spoke about correlations the other day. So the US and the euro, the US yen and the euro yen, they are somewhat correlated, not 100%, but they are somewhat correlated. So if you were to take both trades, you either in your rules stipulate whether how you deal with correlating pairs, whether you still take the two positions or you have a limit of how many you can take, etc., etc. So as long as you do that, then you're covered within your rules. Okay, so euro yen tomorrow 9 o'clock. Have a look at what the current candle looks like. If it is an inside candle, well then you've got a setup to place your pending breakout buy order. All right, Kiwi Dollar. Kiwi Dollar. Was this a setup, guys? It's the ugliest setup that I've seen, but is that a setup? Yes or no? We've got one yes. What do we think? Let's just go purely by definition, okay? Is it a setup by definition? So I've got 1, 2, 3, 4. One person says no, 5 yeses, 6, 7, 8. Okay, the answer is yes, it's a setup. It's an inside candle. Technically, the moving averages from here, that's our definition of uptrend. So that means from there, we've pulled up, we've pulled back down, we've got the setup, and we should be shooting for the stars. That's what it means. Okay. If you took that trade, it gave us a bit of a scare, and if I take it right now, what do you think? Am I too late? Or am I allowed to take this trade as a long trade? Yes or no? Am I allowed to or not? By our definitions. Great, everybody's saying yes. It has not reached my 1-to-1 point. My 1-to-1 point would be, that's the entry, There's the stop. So the 1-to-1 to me looks like it's about there somewhere, roughly. And we definitely haven't reached that. Now, if I hit the trade right now, I'm probably entering a little bit worse off. Let me see how much. I just want to measure. I'm about, oh, it's only about 4 pips. 4 pips worse off if I enter the trade right now. So let's put it to a vote, and just remember when I hit the button, a lot of you are going to be in this trade automatically. Should I take the trade long right now? Let's put it to a vote. Yes or no? 50-50 right now. Just gone over to the positive side. Okay, I got 7 yeses and I got 5 nos. There's still a few of you that haven't voted. Make that 8 yeses. Anybody else have an opinion? Okay, well, let's take the trade. Give me 1 second. Let me just measure out. My stop is going to be about 107. Let's call it 117. Let me just measure out. 60 divided by 117. 50 cents. So let's go 0.3. Okay, so I'm going to trade at, I'm going to risk around about $58 worth. So I'm going to take a trade of 0.03, which is 30 US cents per pip, which is around about, at 117 pips, is approximately going to be equal to about 58 bucks Australian. My head does this calculation automatically. I'm just spelling it out for you guys. If you're having trouble understanding this, I'll do a class on it just to make it easier for you. But if you are, just send me an email and I can send you something to look at. Alright, so right click, trading, new order, 003, and let me place a stop, 65.40, and let me place a target, 67.40. I'll adjust it in 1 moment, and let's buy. Ready? There we go. We're in the market. You can see my marks. Let me adjust my, that's about 1-to-1 there. Okay, so what I like, if I zoom out, see that line that I've got across my chart? My target is before that line, and remember I marked out this area here. This is my 1-to-1, okay? It's before that line. So what I might do is my 2-to-1 is probably just here somewhere. So I might have to make a bit of a decision when I reach this area whether I hang in there or I close some out or do something. Okay, so but there you have it. So we're in the market. Just to reiterate, we have bought 0.03 Kiwi Dollar at 66.59. Stop at 65.40. My 1-to-1's roughly 67.73, which I'll change once I finish the class. I'll push out and I'll do the auto close of half the trade. Now just keep note, if you're taking a trade same size as me, this size is 0.03. If I use my auto program to close out 50% of the trade, can I close out 50% of that or not? Okay, one person's got the answer. Can I close out 50% of 0.03? No, I can't. So that means it will close out, usually it closes out 0.01. So if you want to close out the 0.02, instead of 50%, change this to say 60% and it will close out more. Okay? So it's just important to understand that. Okay, so Kiwi Dollar, we are long, we are buyers, we're in right now. Last one, Euro Aussie Dollar. Now these patterns are really nice, like it's going really nice. Um, so we really need to find an opportunity to buy, but it's not happening, and it just looks like it's about to break. There's no setup here, by the way, so price action is protecting you, and this is just about a break right now. So, um, okay, the next thing we can look at on this one is this. Okay, does everybody understand why I've marked out that area there? It was an area of resistance, which then we broke through and it became support. So there's a chance that there could be support again. All right. So it's one of those hot regions. So look out for that if that was to happen. Alternatively, it'll just shoot straight down. All right. But all I'm doing is I'm marking the area and I'm going to inspect it as we approach that region. From where we are right now, like I don't have the setup that I'm looking for, so I can't actually trade up and I can't trade down. So in reality, I can't do anything on the Euro Aussie, even though the chart looks really nice and smooth. It looks really tradable, but the setup is just not there. So we need to wait, and the next key area that I want to inspect is where I've just marked it out. Okay. Any questions, anybody, on anything that I've covered today? Let me just go back and summarize what we've done and give you an opportunity to type your question in and I'll answer it for you. Aussie dollar, we are approaching that critical resistance line. Even though fundamentally we want to be lower, it doesn't mean we're just going to trade it for the sake of trading it. So let's stick to what we know and look out for a big break tomorrow in this direction, or look out for another setup of that resistance line to trade back down. All right, so those are the two options. Euro USD. Um, we could have an inside candle tomorrow. Need to check it at 9 a.m. and see what happens. Also keep in the back of your head or your mind, sorry, should I say, that we are at that critical sort of 110.50 area, which is the old breakout coming down support. And with data coming out, should we get through that, then it really does open the door for that 108 area. All right, so just keep that in the back of your mind as you're doing your analysis on the Euro USD. GBP USD, there is a big gap there that there's going to be a little bit of pressure to fill it. It just seems to be trading at an illogical level. Nevertheless, nothing technical has shown itself, so I don't have a reason to enter this trade. All I've done is I've marked out the floor, and I could get the opportunity to hit a double bottom, and that will at least justify somewhat of a buy trade. Gold has just had a setup. Let's just watch it for now. That's all we have on gold. The US yen, we could, I'm interested in a 111 buy, more so for fundamental and just speculation. So even though I'm interested in that, I would still like to enter based off a price action trade. Euro yen at the bottom of a channel. Let's see if it holds. If it does, we've got an opportunity to buy, which will support our thoughts on the BOJ. Kiwi dollar we've just bought. We're in the trade right now. I call the trade was we've bought at 66.59. We've got to stop at 65.40. 1 to 1 is at 67.73. Lastly, the Euro Aussie. At a critical level, however, it has not provided us with a a clear-cut price action entry. So we need to look at the next hot region of the chart, which is clearly at around about the 153 level, which happens to be a round number as well. So hopefully, if it does fall through, it could get a bit of a kick and a bounce off that level. All right, so there you have it. That's what we can see this week. Any questions? Anybody want me to address anything for you? Does anybody want me to have a look at something different while I've got a few minutes with you? No, we're all good. Fantastic. All right, so this week, Thursday, we'll continue our work with trends. We'll have a look at the wave tracker, and we'll do some comparisons with what we covered this week, with the last week, T-Chaser, and just to see, give you a feel and perhaps some ideas of creating a hybrid to try and get a better entry into the market and possibly stay in the trade a little bit longer. All right, so we'll have a look at that on Thursday. If you have any questions, as always, just email me. Please take a screenshot of your chart, makes it a little bit easier for me. And I'll see you all on Thursday at 3:30. Take care and see you then. Bye for now.